This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Well, hello, good morning, and welcome, everyone. It is Thursday, March 5th, and this is the AgYield War Room. I, of course, am AgYield's marketing manager, everyone's favorite backup host, and guy that picks up an acoustic guitar at a house party only to play a really poor rendition of Wonderwall by Oasis. If you've got any questions or comments, please feel free to join the discussion. We are answering all your questions and comments at info@agyield.com. With that being said, Brian, why don't you hit us with some overnight numbers?
All right, thanks, Jack. Good morning, everybody. A little rebound overnight here. May corn up 2 3/4 at 446.5. May beans up 1.5 pennies at 11.71, and May Chicago wheat up 5 at 5.73 1/4.
Mute it.
Yeah. Did Ben unmute you?
Wow.
Touch it.
Yeah, that's what I get. Speaking of unmuted, Ben, why don't you kick off the discussion today?
All right. First, Jack, I'm really shocked that if you pick up a guitar, you're going to do an Oasis song. I had you pegged for Skyrockets in Flight by the Starland.
Strong.
Yeah. Outside interference is going to be, I think, the trade for a while. And Dustin and Justin have mentioned that it creates a little bit of a volatile environment. Crude oil is really strong again overnight. We got great corn sales this morning. I think the third best since early December. So that's kind of exciting to see the bounce. It definitely were, it was kind of at the whipping post there early part of yesterday morning. Even beans, a lot of people frustrated with the rally. We're sitting here a dime off our recent highs. Wheat, the short, there's nothing left there to really expose anymore. It's been fairly well covered. So we'll see. Speaking before the show, I thought Dustin, we were talking about the issue with crude oil and fertilizer, and had fielded numerous calls from customers, and you just don't know where that's going to go, right? This could get, it could be over in 24 to 48 hours if they come to the table. It doesn't feel right now that that's what they want to do. I don't think that, it takes both sides to negotiate, and I don't think that at this point, with our commitment to the region, that we're going to settle for anything less than what we want. And I think that the other side is very stubborn and wants to drag this out from some of the things that they've done. Most notably, Dustin brought up beforehand of, putting a hole in a tanker over there and it leaking oil into the water. So it should be some volatility. Corn is one that anyone who's short it and on new crop is probably got to have some concerns, and anyone who's long an old crop probably has some concerns. Maybe it's a tug of war for a while, but seasonally we should find some footing. But everyone's going to have last year on the frontal lobe. So I think you watch it, stay disciplined, keep perspective, and take it a day at a time here.
Thanks for that, Ben. Yeah, Dustin, we are anything but peace in the Middle East going on right now. What do you got, and what do you think the implications are for our friends that are grain traders or farmers?
Yeah, well, it's hard enough, just thinking about, what to do without war going on. And if you think about the impact of energies, those are the $1 million questions. Is like, how does this, Iranian conflict get resolved? Is it a very short-term thing, and the market can go back to, kind of a normal trading pattern? Energy is kind of elevated for a short period, and then we start seeing oil flow again. My understanding is oil hit $100 a barrel in China yesterday. We hit WTI, which we're way more energy independent nowadays, but that was at a new high last night. I think that's going to definitely spill over into how our market's priced from the energy side, but also just the urea price, right? Is that going to impact some of those extra corn acres that were still up in the air this year is, Justin, I think you made the point that maybe it's bearish beans yesterday in the end. It could be that the ratio goes down. Corn needs to go up in relation to beans in the new crop year. Right? We're coming off of a high ratio in old crop beans to corn. So I do want to point out last year, I think a lot of people looked at last year's high in D25 corn was 479.75. It happened Feb 19th. And it was, it wasn't necessarily counter seasonal. It was just really early in the seasonal window that the high happened. And I think a lot of people pointed that out. And then if you end up getting some sort of, lower fours or mid fours average price for the year, you look back like, well, we need to do more. We need to do more at the early part of the year to get that 475, 479 price like last year. We're there right now, right? So there is a consideration for how hard do you hit the gas. And I would point right back to, farm doc numbers, to the break-evens that we see every day. This is close to a break-even price. If we get the very elevated yields that we're targeting to get, we take a 5% yield loss, 10% yield loss, quickly getting into that $50, $100 an acre loss again by selling too much here. And what the interesting part about price support programs is that we move away from them as prices go up. There's less need for government to think about things like bridge payments or ECAP payments. The two things that we've had serious money come into growers' hands over the last 2 years. They're all price support programs beyond Farm Bill. And we have the strongest Farm Bill again that I've seen in my career, right? Large payments projected and large safety nets if the prices drop. So it's not like I need to, in my opinion, need to get overly aggressive when there's such geopolitical uncertainty out here. If they're successfully able to keep that Strait of Hormuz closed and urea prices stay as high as they are, maybe corn does need to trade above $5 in new crop, right? Just because we have a problem for future production potentially growing right now.
Certainly. Thanks for that, Dustin. Justin, anything to add there?
No, my only caveat to what Dustin was saying is, sometimes you look back in history, 70s, 80s, price supports can be a bad thing too, where you can't really cut back production and you end up actually hovering right around the support price. Like we saw back long time ago where, you had a high, price support and that became a ceiling for grain prices. So it can have unintended consequences too. So that's just a caveat to that, but I generally agree with what Dustin's saying. I think personally just went through first notice day. We've talked about it a lot on this show. I think a lot of growers had to sell corn to, pay bills, rent checks, all those types of things. And I don't think the appetite's going to be there in the, until maybe next first notice day, in the May contract. To really sell anything here unless we either have a large flat price move or, the next bill is due. So I think that's, gonna, let rallies happen a little easier than they have the last couple months. The other thing I would say on fertilizer is that we've been expensive to start. So, the question that I have in my mind is, what were the buying patterns this year versus previous years? Were a lot of people waiting for or hoping for cheaper prices in the spring to add the fertilizer versus, previous years where they would be, 80% priced. So that part I don't know. So I do think coming from such a high acreage number in corn that you have to suspect that, you're leaning to a bigger switch than, a few million acres. I'd probably be leaning closer to 4 million acre switch or more if prices remain elevated, just because to Dustin's point, profitability is not there to go pay up ridiculous prices for fertilizer. Do you end up just planting more soybeans, especially in the areas, that were heavy corn on corn last year? That part I don't know yet. And I think we've starting to get we have phone calls coming in from clients, so you're starting to get the feeling that it's maybe a little widespread. And the question is it widespread on, the last 10% of acres or what is that? Which can have a big implication on prices, in my opinion, from where we are right now. I don't know what you guys think on that.
Yeah. Any comments there, Dustin?
Yeah, I heard a lot of people waiting because the price is so high. So that's a problem for sure.
Yeah, because normally, I mean, you'd say like on today's date, it's really not that big of a deal because most people have stuff priced. But I think just with the tight situation and, I think it was one of the highest prices of fertilizer versus the price of corn we've had in a long time. So.
Well, yeah, I just even talked to some people that they just booked here very recently at 595. And it's already up above 700 within just a few days. So that's all recent history.
Yeah.
Gotcha. Guys, anything else before I shoot it over to Ryland with Livestock? Ryland, you're up.
Well, Jack, got a nice little bounce yesterday. Quite a bit of follow through support. Just hard to keep this market down, even with what's going on in the rest of the world. We've managed to pop our head back above the water pretty much 2 days in a row. And yesterday actually closed over the 20-day moving average. Just kind of seemed like what we talked about, maybe that focus on the basis between April and where last week's cash was. It kind of felt like it needed to narrow, just getting a little bit too wide. So overall, just kind of waiting to see what cash actually does here, especially in the north, where it feels like we've seen a little bit more weakness than usual. Did see a little bit of light trade at 380 dressed in Nebraska, so about $3 lower, but I think the cash outlook's starting to improve just slightly. Cautious optimism here, but we've seen a near $10 rally in choice beef. We've seen these light kills, so it just feels like overall, we've seen this contra-seasonal move in the beef market. And with packer margins improving, maybe we see those kills start to pick up in the next few weeks if this kind of trajectory still holds up in beef prices. So we'll see how that goes. But otherwise, just waiting for more cash, especially see how the South shapes up. But yeah, I think you've done a lot of damage. I think on the board here, maybe things cool down a little bit overall. I think there is a little concern on the feeder side, especially with grain prices really starting to strengthen here. We are seeing open interest start to come down a little bit. So I think that there may be a case that this could be a little bit of a concern from a feed standpoint just down the road. But once again, we'll see if corn can actually hold its rally. And on the hog side of things, new highs for the move here, new contract highs in July on back. I mean, right now the board is just leading the charge. And as we stated past couple of days, the bellies are really the star of the show right now. And it feels like that's leading a lot of the support. We didn't really get any cash reported yesterday, but bellies were up another $1.46. So it feels like that is really where the trajectory has been. We are starting to kind of get back up into the higher end of the range here. So, especially with the market just hitting contract highs in the back end, I think it makes a lot of sense to look at forward margins and maybe get a little hedges on, or at least start thinking about it back there. So,
thanks for that, Ryland. And with that, we will wrap for the day. A few things in the description in the comments section for you guys to take a look at. Of course, we're having our national scholarship competition, the AgYield at AgYieldNextGen.org. We're doing a simulated grain marketing, think fancy football meets grain marketing for college students at accredited college programs. So you can sign up for that in the comment section or in the description below. On top of that, if you love the War Room, we also have the War Room Report, which is a newsletter and exclusive video library for War Room super fans that love what we discuss on a daily basis. So go be sure to check that out as well. On top of that, thanks for watching the show and subscribing to the channel. Give us a like and subscribe. Helps us get our show out to a wider audience and makes the YouTube gods happy with our algorithm and our engagement. So I appreciate any help that you would be able to support us with there. Thank you so much for your viewership, and we will see you tomorrow. The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.